Hello guys, Steven Dax here. Welcome to this YouTube videos, and I know I haven't done a video for a while. I've been traveling for a lot, so we're getting ready to launch our new platform, which will be called StockCraft. So in this platform, one of the special things that we have is we can run a simulation based on your own strategies. So if you want to find or you want to create your own strategies, you can actually go in for the last 15 years to test it out in either NASDAQ or New York Exchange to see if your strategy actually works or not. So in that way, it's much better to find an edge than tracking in real time going forward. This platform will be great for beginner traders. If you're interested, please click the link below in the videos and register your email. So as soon as it's launched, I will let you guys know. So today's video, we'll be going over some of the recaps on the ticker that happened this week. Specifically, since the last 2 weeks, we haven't had that much going on. All we had is AMC going back and forth between 50 to 60 and GME going between 200 to 230. Since those two tickers have calmed down in terms of how much volume has been trading every single day, and now we're heading into the normal market that everybody's trading around under $10 stocks now. So today I'm going to go over some of the long strategies and short strategies based on the observation that I had for the last 2 weeks, and also to see if the actual data changed compared to the last 6 months. So we have 3 tickers today. I want to go over AMC. You can see that the ticker has been consolidating between 50 to 60 for a very long time. And we're already heading into June, actually July. So the earning actually comes out around August 5th for this ticker. It's not going to be correlating the same level as the current price. So likely this is going to drop, but overall, in terms of volatility, in terms of risk reward, it's not really worth it to trade AMC because it's trading really low volume now, and also there's actually not much range to profit from because it's either going from 61 to 58 or 58 to 55, 55 to 60. So it's moving around 1 to 2% per day. So not really worth it to trade. I will have to leave AMC and GME alone. So once they completely lose liquidities and they drop where they belong, then the volume will start heading into other tickers. CIEN and MRIN, those are the 2 major runners that happened this week. MRIN actually ran up to almost $20 per share based on this $5 breakout. So you can see that the stock had around 170 million support, around $6-ish. If you take a look at in 15-day and 2-minute chart, the stock actually consolidated right above the support, which is around 6 to 560, and consolidated a little bit above that, so 650, and it got in a lot of volume. Gapped up in the next day up to the 10, 11-ish. So this is where it comes to the tricky part. Whenever you are trying to go long or short, you have to actually go in and see, okay, what is the buyer's mentality today? What is the short seller's mentality today? So let's look at the chart. Whenever you see that something that goes over 100% in a current day, trading a massive amount of volume, the buyer's definitely going to be a little bit nervous and they feel like they missed out the major run up. So they would like to buy a little bit above the consolidations, so which is around $7 and buying around $8, risking $1, which is not that bad. So going long in a multi-day runners, it's actually caused the major squeeze on Tuesday, went from 8 to almost 20. And traded around 300 million shares. So when it traded around 300 to 400 million shares, normally there's not going to be higher volume coming into the next day because we're already hitting the maximum volume that's in average trading in the entire penny stock market. So in this way, I gapped down about 20%, traded about 2 million volume in the pre-market. So you know it's not going to trade 300 million shares throughout the entire day. What we know is that as long as the stock on current day doesn't trade as much volume compared to yesterday, the stock is unlikely to go up or unlikely to continue trending up on that day. So you can see that stock actually went from $14 to $10 per share. But overall, this ticker is not very tradable because MRAN gapped down about 20%. We all know that maximum drawdown percentage on a ticker, especially on intraday level, is around 26%. So it's already down 21%. You only have 5% in average to profit from. I understand that ticker is very overextended, and also you are trying to short into a support from yesterday, which is at 12 to 13 area. So it's not very ideal shooting at the open. But MRN, definitely good long opportunities. Personally, I missed it, but I will be looking for these type of opportunity in the future. It's a very classic multi-day runners and ran for about 3 days, and now it's pretty much dead and it's likely to continue to fade back to around $8-ish in about 2 weeks. So another ticker will be CIEN. This is a classic gap up short. Well, we know that based on my personal experience of tracking those type of gappers, if they don't push over 20% trading with massive amount of volume, the chart typically gets really strange throughout the day. So you can see there is a morning stuff, it broke down, it was a fake out, then came back up testing the $9 area, rejected, then pushed up trying to break out again, rejected again. Typically when a gapper pushes anywhere between 25 to 30% and they do these type of stuffing candles, the entire chart is likely to turn into a all-day fader. But for CIEN specifically, it didn't, and that's why you are seeing these strange actions and people chasing into weaknesses, and now it's reversing from the downtrending momentum. So for future gappers, especially trading with mass amount of volume, and it's also considered to be a low float, if the stock didn't really push, I would say 20 to 30% in the morning, I would not recommend shorting it if it's trading over 100 million shares before 10:30. So that will be all my thoughts on CIEN and MRAN. Not very ideal tickers. MRN is a great long, but it's not a really great short. AMC is still laying in the same area. So make sure to stay safe out there and keep tracking your statistics and make sure that you do not fall into these type of traps. There's tons of long traps and short traps everywhere. The market just starting to come back after the massive run on AMC. So stay safe out there, and I will see you guys in the next video.